Well, hello, it's Robert Miner with Dynamic Traders Group with this week's YouTube video that we do for our YouTube subscribers and our Twitter followers, where we take a look at a market and potential trade opportunity coming up, and also looking at what may be a significant trend. That's what we're going to do today with the S&P. Haven't done one of these videos in a couple of weeks, and a couple of weeks ago I did with Bitcoin. And looking for a corrective low in Bitcoin, but not until more than likely the end of March. Well, you all know what happened to Bitcoin in the last week. It just shot up like crazy on a panicky news event, not any kind of fundamental or typical sort of cycle, but on a panic news event. I just want to warn you that while, well, more power to you if you happen to be long when that event occurred, but there hasn't been too much follow through on that, and just be aware that still this March timeframe, latter part of March, it's kind of important. So if you see Bitcoin sideways to down into the latter part of March, and not necessarily to a new low, it's already made the 50% retracement, but if you see that, I think you'll have another opportunity to participate in what may be a multi-month trend instead of just a few-day trend. Okay, that's it. What we're going to look at today is the SPX. And as always, if you like what you learn here, if you find it valuable, check out our DT reports and our other information we have at dynamictraders.com. Got links right down below for that. Okay, let's get started and see why I think the SPX and the other indexes have given us some strong signals that the next major trend is going to be bearish for several weeks, if not several months. Well, this is the SPX weekly data. Let's take a look at this chart and the information it's providing us, because I think it's really important. It'll keep us oriented in the weeks and months ahead. Let's start at the bottom of the chart. The weekly momentum, the 8-weekly momentum, made a bull reversal from the oversold zone last week. That's a pretty good signal that a weekly low is complete. And at worst case, shall we say, that if the SPX should continue to decline next week, the downside should be very limited before a weekly low gets confirmed. So that's a valuable piece of information for relatively short-term traders, those that trade those trends that last a few days to maybe 2 or 3 weeks, that type of thing, that a weekly low is either complete or should be within the next few days, that is, by next week. We also want to be aware of course, next week is the Fed announcement, next Wednesday, and frequently, if a financial market is trending into a Fed announcement, is that it's frequently, particularly if there's other time factors, there's frequently a reversal that's made, at least short-term reversal. We can just look back. I've just got a few of them on this chart. The December high was made the week of this was actually the intra-week high, the week of the Fed announcement. The closing high was a couple weeks earlier, the week of the job reports. The February Fed announcement was made the week of the recent weekly high, and then it's been sideways to down for about 6 weeks since then. So we want to be alert to the technical position of a market going into the Fed announcement. And then, of course, this week, not this week, well, this coming week, is the next Fed announcement this Wednesday. And we've had a clearly defined decline going into that week. Now, next week is also the maximum time probable to complete a weekly low. Why is that? It's that unique time factor which we measure the high to a low, and that's usually the maximum before we get a comparable reversal to these other weekly reversals. That is one that would last at least 2 to 3 weeks, if not a little bit more. Now, that's the maximum time. That's not the target. That means by next week, that weekly low should be complete. If it wasn't complete this past week, when it had a pretty good bull reversal on the weekly price bar, and plus the 8 momentum cycle made a bull reversal. That's pretty significant. What's more important than identifying what we might consider a weekly low here, and followed by 2 to 3 weeks sideways to up, is the higher time frame picture. And that is more than likely back here in early February, The SPX completed an ABC correction. So the way I phrase that is as of early February and following the decline, and particularly the decline below, I call this a nodal line. I realize it's a trend line. You really don't want to use trend lines as trade triggers, but they can be helpful to understand the strength or weakness of the market. So it exceeded that trend line, came back and tested it, and then declined sharply below it. That itself is a bearish setup, a bearish signature. But also it came up, made a new high, and then came down and closed into the range of what I have labeled an A. So what we can say is that as of early February, the SPX is in a position to have completed a weekly high and an ABC correction. Really important, because what follows a correction? Well, continuation of the trend prior to the correction to a new extreme. That would indicate that more than likely, eventually, the SPX is going to continue to below the October low without exceeding the February high. Now, that's a piece of information that we can use. Of course, we wanted to follow up on it and see that it's confirmed, but literally all of the technical and pattern and momentum cycles positions indicate that this high should hold, and following that high is the SPX should eventually continue to below the October low. So what should occur when pattern-wise when a correction is complete? Well, pattern-wise, we should see then an impulsive trend coming from that reversal, meaning that the decline should clearly be impulsive. For those who follow Elliott Wave, we know that impulsive trends are usually in the direction of the higher time frame trend. So if we see an impulsive trend coming off the early February high, it indicates that the higher time frame trend is reversed to bearish. So let's take a look at the daily data. Here's the daily data coming off of the February high. This is as clearly defined an impulsive trend as you're ever going to get. Probably an A or 1, 2, 3, 4, and a 5. What does that indicate? It indicates that the higher time frame trend is bearish, and that would indicate that, again, this February high, early February high, had completed a correction, and the bear trend is now continuing. That doesn't mean we're not going to have corrections that could even last 2 or 3 weeks or so, corrective rallies, but more than likely this February high should not be exceeded before the SPX eventually turns around and continues to a new low. But we know that we're at or near a weekly low. High probability it was completed last week. At the latest, if by chance the SPX continues lower next week, that would be the maximum time to complete that weekly low. Then ought to be sideways to up in a corrective rally for 2 or 3 weeks. So if the March 13th, last Monday's low, holds, then a corrective rally would usually continue into the late March, around March 27th, into early April, April 4th. That's a 38 to 62% time retracement of this decline, and typically it would reach the 50% retracement or higher. So that's what we're going to be looking to should the SPX continue sideways to up. And we want to be aware that next Wednesday, very likely to have some kind of, at least a short-term reversal. We'll be looking closely this next week on the short-term trend going into Wednesday. But again, if the March 13th low, last Monday's low, holds, is we'd anticipate 2 to 3 weeks, sideways to up, eventually reach about the 50% retracement, but this rally should be a correction. And what we want to be focused on, if that does indeed unfold, is that then we want to be alert to setups on the bear side for a probable continuation of the bear trend to considerably lower in the weeks ahead. So that's what we're going to be looking for. Well, that's it for today, my friends. Thanks for checking out these videos. If you want to keep up to date when we have new videos and we have new updates on our website, click on below the like and the subscribe, and also check out our DT reports. You can also sign up for a DT Traders News, absolutely no cost. No, we don't need any information but your email, so we can let you know when we put an update up on our website. That's it. Take care. Have a safe and fun week. I'll be back with you next week or the week after that with another update. Take care. Robert Miner, over and out for now.